This loan has helped millions of Americans become homeowners, and most people don't even understand why. So I'm here to break it down for you so you understand, and hopefully it encourages you to see if you can buy a house today. And we're talking about the FHA loan. So let's just hop right in, grab your pen, grab your pencil. I'm going to give you the data. Here it is. So one of the biggest hurdles that people have when it comes to buying a house is saving money for a down payment. You think you need hundreds of thousands of dollars to buy a house, and that's just not the case. FHA guideline says that you only need 3.5% down, 3.5% down to buy a house. So as long as you have a 580 or better credit score, you have the ability to purchase a home for only 3.5% down. Now do the simple math, guys. If you want a $200,000 property, you're putting $7,000 down. That's not that big of a hurdle. It's not 20%, it's only 3.5%. If you want a $400,000 property, you're putting $14,000 down. And here's the good news. Those funds can come from a lot of different places. A very popular place that people are utilizing is their retirement accounts, their 401ks. They're able to access those funds for the down payment for a home. So this is making more things easier for people to become a homeowner. This is not new. This isn't a new fancy program. It's been around for a long time. The problem is that you don't know these benefits and you're out there renting and trying to save when the truth is you can probably buy a house right now with only 3.5% down. If you have less than a 580 credit score, you can still get in FHA. You do need a larger down payment. But if your credit score is lower than 580, there's probably some other challenges we need to solve, and I don't want to get too deep into that. If you do want to have a conversation about us, our phone number is all over the place. It's in our banner. It's in the description, so just give us a call. But let's talk about the next benefit of FHA, okay? And I already kind of touched on it. You only need a 580 or better credit score, okay? Now, that doesn't mean that you can have bad credit. Bad credit means that you have a lot of derogatory, a lot of lates, maybe on credit cards, auto payments, that type of thing. If that's the case, then make sure you've been making your payments on time for the past 12 to 24 months. If you have 12 months on-time payments, give us a call. We'll give it a shot. If you have 24 months or more on-time payments, you're probably already approved. You just have to put the file together. There's no guarantees. Guidelines are just stating that if you hit these minimums, you can probably get approved, but it doesn't guarantee. So credit's a tough one, guys. As long as you've been paying your bills on time for the past 12 to 24 months, you should be good. If you don't have any lates and you've never had lates, your credit score is probably better than a 580. It's probably in the 600s, maybe even 700s, and your probability of getting approved skyrockets, okay? Really skyrockets, because getting approved on an FHA loan is much easier than people know, okay? They may have a 620 credit score, 630 credit score, and they're like, my credit isn't good enough to buy a house. But the truth is, it probably is. It probably is good enough, and you just don't know it, and you haven't spoken to the right person yet to figure out if it's going to work, okay? So down payment, you only need 3.5%. Credit score, you only need a 580 or better, okay? I'm already loving this, and you probably are too, because you're thinking that you need an 800 credit score, and you don't. Okay, let's talk about the next piece. People are like, I have a lot of debt. FHA has a higher debt to income ratio tolerance. So what that means is if you have car payments, credit card payments, student loans, personal loans, you're thinking I can't afford a house. Well, you might be able to. You haven't looked into it and you haven't spoken to us yet. That's why I'm doing this video. Okay, so if you do think you hold a lot of debt, you might not. You might get approved. And I've spoken to so many people that think I need to save a lot of money. You don't. That think I need a great credit score. You don't. That thinks I need to pay off all my debt. Well, you don't. And now here's the problem. The problem is if you try to solve all these challenges, home prices are just going higher and higher and higher. It may take you years to save money. Prices are getting higher. It may take you years to try to get a better credit score. Prices are going higher. It may take you years to pay down debt, and prices are just going up. So here's kind of a scenario. If you looked into buying a house right now, let's just say that the house prices are $400,000, okay? And it takes you 10 years to get there. Well, what are home prices going to be in 10 years? Could be $500,000, could be 600,000, could be 700,000. You could be paying hundreds of thousands of dollars more when you could have just got in today. And all it takes is a phone call. So getting pre-qualified is what we do, which means we go through your data and then we eventually establish a pre-approval, which means we verified your income, we verified your debts, we verified your credit, and it shows that you are approved to be able to go shopping up to a certain budget. And once you're pre-qualified, you're off to the races. You're off putting in offers. Hopefully you get a house. But the point of this video isn't to talk about getting pre-qualified. The point of this video is to let you know that the barrier to entry and the ability to buy a house is much lower than you probably think. Okay? Here's another cool benefit from FHA. It allows gift funds. So let's just say that you're lucky enough to have a friend or a family member that's willing on giving you money to buy a house. Those funds are usable. You can use those funds. So once again, if you've saved the money, awesome. If you needed to access your 401k, you can do that too. Or if you have a loved one that's willing on giving you the money to start off your journey and create your own life and provide for your family, then that'll work too. So that's another great benefit. Here's something that's also really cool. It offers generally better interest rates than a conventional loan. Now, conventional loans is when you talk about putting 20% down and you don't have all, mortgage insurance and extra premiums to be able to buy a house. But that's a lot of money. Okay, that's a lot of money. In this case, you're able to get in with lower down payment, not perfect credit, right? Maybe you carry more debt and you're still able to get a lower interest rate. A lower interest rate when you buy your house, which equates to a lower monthly payment, okay? Now, let me give you the downside. You are putting less than 20% down, so it does come with mortgage insurance, which is an extra premium that's added into your monthly payment that you pay per month. It's not something you have to have forever. It is not something you have to have forever, but it is something you're going to need for now because you are putting less than 20% down. So that's the catch, okay? Everyone's like, what's the catch? I'm only putting 20% down. I have less than perfect credit, but I'm approved. What's the catch? You're paying a little bit more per month with that mortgage insurance premium because you are getting in with less than 20% down. That's the catch. And that's the difference between you owning a home or never owning a home. Then forget about it. It's a non-starter. It's not even something that's standing in the way, okay? Now, the payment fluctuates depending on how much house you buy. The lower amount of money you borrow, the lower that mortgage insurance premium is, the higher it is, okay? But once again, if it's the difference between you owning a house and not owning a house, forget about it. It makes sense. You're coming in with way less money than you were thinking you needed to save. So that's a big deal, okay? So here's another cool thing. FHA does have a slightly more comprehensive appraisal. So when you are buying a house, you need to get an appraisal on a home because the bank is lending you money. So the bank needs to confirm that this house is worth what you're buying it for because it has to make sense, right? If you're buying a house for $500,000 and it's only worth $300,000, why would the bank lend you more money than the house is worth? That's not a safe investment for the bank and for you because down the road you might want to sell it or refinance and you need to make sure that the value is there. But inside of this appraisal, the appraisal inspector is actually going to look for health and hazard issues, okay? How I like to explain health and hazard issues is if you put a toddler in the house and let it run free, it needs to be able to run free safely and not have any health issues or hazard issues. Well, what's a health issue? Well, paint chips, okay? Years ago, they used to use lead paint to paint houses. I don't know why, it's just the way they did things. And if it starts chipping and a little baby crawls over there, grabs it, puts it in their mouth, well, they can get sick. That's a health issue, okay? So it can't have any of those. That's a benefit, right? It makes sure that when they sell you the house, that if it has those issues are remedied before you buy it. Now, what's a hazard issue? Let's say that there's exposed wiring, okay? There's exposed wiring, a toddler walk over there and electrocute themselves. Well, that's not safe. So the standard says that has to be remedied and fixed before you can take possession of the house. And the seller is forced to make those remedies before you buy it. That's a benefit to you, okay? So now let's walk through it again. Low down payment, 3.5%. You don't need perfect credit, 580 or better. It allows you to have more debt on the debt to income ratio. So if you have car payments and credit card payments and student loans, it factors those in and allows you to have more of those. And it has a more strict appraisal inspection to be done, so the health and hazard issues are safe. So even if you don't have a toddler, you're moving into a more safe house in this case. And that's just some of the benefits. I want to give you guys an idea of why you or how you can actually buy a house today utilizing an FHA loan, whether you're a first-time home buyer or you're someone who's actually buying a house for the second time, but maybe you just don't have the money, the big down payment saved. Maybe you had a bankruptcy, and FHA will allow you to buy a house 2 years outside of a bankruptcy. 2 years goes by like that, guys. So if you had those challenges in your life, you can buy a house FHA. Remember, the only real big rule and guideline for FHA is that it's going to be your primary residence. You can't buy this house to rent it out. You can't buy this house for it to be an Airbnb. It must be your primary residence. Must be where you're living, and hopefully you're raising a family and you're going to have your Christmases, you're going to have your holidays, and this is where everybody's going to come. And the reason why it's going to happen is because you utilized a program that you might not know exists called FHA. I hope this helps. Have a great one. Call us if you need any help.